Hello, Randy Patrick here. Time for Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. It's turning. It's a little excruciatingly slow, but it is turning. All right, simple as that. Today is the May 28th. I hope everybody had a great Memorial Day long weekend. And news topics for today are the Case-Shiller U.S. Home Price Index was released this morning. We'll talk about that. Also, I'm going to review Realtor.com had a top 10 list of where home prices have fallen the most in the country, and a review of the California April sales data. So that's our scoop for today. So again, please help our channel and subscribe. That would certainly help us grow, so I appreciate that. And let's get into the Case-Shiller stuff right now. So here we go. So basically, it was released today, and remember the Case-Shiller is a little bit of a drag along, I guess you could say, calculation. We're talking about March 2019 statistics, even though we've seen some stuff from April already with respect to Realtor.com and other states' information. What they released, this is the Case-Shiller Index. It's a calculation, so it does take a bit longer to come out. But basically, so it's the S&P CoreLogic Case-Shiller U.S. National Home Price Index, covering all 9 U.S. Census divisions. The news is it reported a 3.7% annual gain in March, which was down from the previous month of 3.9%. And essentially, I guess you could say that it's slowing down. That's all I can really say to you guys at this point in time. Las Vegas, Phoenix, and Tampa reported the highest year-over-year gains in the 20 cities, and they have a national index, a 20-city, and a 10-city index as well too. So Vegas, Phoenix, and Tampa posted the highest year-over-year gains in the top 20. Vegas led the way with 8.2% year-over-year price increase, followed by Phoenix with a 6.1% increase, and Tampa with a 5.3% increase. So there you go. So still a little bit of increasing happening in specific markets across the country. And again, I think this is important to hear the quotes that come out on this, and I'll post the link to this. You can pick this off the internet. So really, from their analysis perspective, is home prices continue to slow, which we understand that. The patterns seen in the last year or more continue, which is year-over-year price gains in most cities are consistently shrinking. Double-digit annual gains have pretty much vanished. So we haven't seen double-digit gains for quite some time now. The example is, Vegas had 8.2% gain, and 1 year ago, Seattle itself had a 13.3% gain. In this report, Seattle's prices only rose 1.6%, so not a heck of a lot. So we're seeing the shift to smaller price increases is broad-based and not limited to 1 or 2 cities where large price increases had collapsed. So it's becoming larger across the board, affecting more and more of the metros here, which is interesting. Other housing stats tell a similar story. Existing single-family homes are flat. Since 2017, I guess you could say the peak sales were February 2018 at 5.1 million annual units, and the weakest was 4.36 million, which was past January. That's a pretty big delta range what we're looking at here. So given the broader economic picture, housing should be doing a lot better. Mortgage rates are at 4% for a 30-year fixed rate loan. Unemployment is close to a 50-year low. Low inflation and moderate increases in real income would be expected to support a strong housing market, but it's not doing that. I guess you could say measures of household debt service do not reveal any problems, and consumer sentiment surveys are found to be upbeat. The difficulty facing housing may be too high prices. So that's exactly kind of what we're looking at here. And I guess you could say at the current lower pace of home price increases, they're rising at twice the national rate of inflation. So there you go. So again, the CoreLogic Case-Shiller Index is up 3.7% year over year, and double the 1.9% inflation rate. So having said all those quotes, it really is apparent now that the market is slowing down. We're not seeing the big home price increases. And for myself personally, I look at what I look on the internet as a litmus test as to where the market's going. We see a lot more people talking about the slowdown in house appreciation, a lot more articles, a lot more people commenting on it. I mean, just the amount of YouTube videos that we're seeing now. Since I started doing my video series, I know that there's probably another half dozen or a dozen more people that are chiming in on this subject as well too. So certainly it's becoming more of a trend topic, and that's it's to be expected. That's typically what happens. Now, if we look at some peaks here, again, as I say, when it's still showing an increase, but the increase year over year is becoming less and less. So based on the current national city index compared to the 2006 peak, we are up 11.7% from the 2006 peak, which is kind of interesting. Now, to qualify that though, realize that the peak was in 2006, the trough was in 2012. And when we're taking a national look on the national index, we basically, I guess the trough was about 27+% from the 2006 peak. So 2006 peak, trough, and now we're above that and up 11.7% more. So that's the difference now. So I guess this to me looks like another all-time high, which is quite interesting. But we're seeing a lot more broad-based decreasing in values. I'm going to go through just the top 20 here, the year-over-year change, so you can get a feel for what's going on here. And I'll try to speak as slow as possible. Again, I will post this link in the information section of the video, but just for our information here, Atlanta, the change was positive 4.7%, Boston 3.8%, Charlotte 4.0%, and again, these are all positives here. Chicago 1.8%, Cleveland 3.5%, Dallas 3%, Denver 4.3%, Detroit 3.3%, Las Vegas again was the leader at 8.2%. And again, commenting on, as I said, Vegas for whatever reason is harder to get data out of from at least the Realtor Association, which I find is troubling. And I know a lot of you have commented saying you see a lot of activity or a lot more homes in the market, a lot more price decreases. So that's today, it's April, that's going on through May. This is again going back to March. So we're still seeing probably some higher numbers that will start to decrease even more. And if you recall one of the last videos, I had you can see that comparing Redfin's always a little bit ahead of the Case-Shiller as far as what they do statistically, and so Redfin was definitely showing lower trend, and Case-Shiller was following this trend as well too. Los Angeles only up 1.3%. Miami 4.3%, Minneapolis 3.7%, New York 2.3%, Phoenix, the number 2, was 6.1%, Portland 2.6%, San Diego 1.3%, San Francisco 1.4%, Seattle 1.4%, San Fran 1.4%, Seattle 1.6%, and Tampa 5.3%, and Washington 2.8%. So I look at going, the West Coast is where we're seeing the smallest price increases, which typically is not surprising, and that's for last housing crisis, that's where it kind of fell apart or started to, and we're seeing that right now. That's your scoop on that bit of information. Let me just take a look, make sure there's nothing else here I got to comment on. And no, so that's the whole Case-Shiller, again 3.7% year over year. Going now to Realtor.com, and again, the point I want to make, and I've said it a couple times before, is this is I guess you could say that April home prices and whatever, and again, its sales are slowing down despite declining interest rates. So, at one point in time, a few months ago, the market seemed to be very dependent on interest rates, and the thought was, well, we see such deltas and shifts when, interest rates go up slightly. The following week, purchase applications are down, refi applications are down, and the thought was, okay, when the rates are dropping, we're going to see much more activity. Well, some of that activity has been a little bit slower, and we're seeing less and less sales activity, slowing sales activity as we move into the buying season, which is kind of troubling. And again, despite having lower interest rates, so the rates were peaking, and end of the summer kind of time frame, 2018. They've moderated, they've stable, they've dropped a bit now, and we're not seeing any uptick in sales because of that. So Realtor.com, 1 in 5 metro areas are seeing decreases in home prices. April was the lowest home price growth in 5 years. Buyers have hit an affordability ceiling. Buyers are dropping out. That's why prices are adjusting downward in some markets. And again, even when rates are low. So now we're at the point where, okay, was it interest rates, or is it just prices and affordability now, or a combination of both, essentially? So again, buyer fatigue, buyer frustration, that's how I look at it. So the top locations where home prices fall the most, this is a Realtor.com, I guess you could say, publication. Number 1 location where sales, I guess you could say, this is the median home list price. So in San Jose for the month of April, it was down 8.4%. So number 1. 2, there's a location called Oxnard, California, down 5.4%. Number 3, we've got College Station in Texas, down 5.4%, and that's around the it's close to Texas A&M University, so down 5.4%. Number 4, Bridgeport, Connecticut, down 4.9%. Number 5 is San Francisco, down 4.1%. And again, these are median home list prices. Hilo, Hawaii, down 3.5%. Cape Coral, Florida, down 3.3%. Laredo, Texas, that's on the Texas-Mexico border, down 2.9%. Huntington, West Virginia, down 2.3%, and Iowa City, Iowa, down 1.8%. So as you can see here, we've got a little bit of a mix of, where this is happening, where they're falling the most. Clearly, 3 out of the top 5 are in California, 1 in Honolulu, like Hilo, which Hawaii is expensive. Now you've got a couple mid, I guess you could say Iowa City, College Station, Texas, 2 in Texas, Cape Coral, Florida, Virginia, West Virginia, and Bridgeport, Connecticut. So we've got the West Coast stuff. We're seeing a little bit in the Midwest and stuff on the East and the South here. So, pretty well spread out. So it's not concentrated in one metro market location. It seems to be across the board now. And again, reflecting back on Case-Shiller, that was the comment. It's not just one major area like a San Francisco or San Jose that's seeing a huge increase and a huge decrease that's changing the index value. It's now broad-based across many metro markets across the country. So again, that I think is interesting. So just now we're going to move on to California, which kind of rounds things out here with respect to where pricing, home sales, and pricing is going. So again, the April 2019 sales and price report. Sales remain stagnant despite declining interest rates. So once again, that comment was made. Single-family home sales were down 4.8% year over year. The unsold inventory index was 3.4 months, which was a slight increase. So April 2018 was 3.2 months. It's now 3.4 months, so a slight increase. Funny enough, though, that the median sales price, I think, did another all-time high. So the median sales price for April in 2019 was $602,920. So that was, I think, looks like an all-time high if I actually go and take a look. Well, maybe not all, maybe not. Last few years it was high, maybe not quite back in the pre-crisis days, but looks like it's been at least for the past 10 years. 10 years, it was an all-time high. And while the state median price reached an all-time high, price growth has slowed down. So even though it reached an all-time high, price growth for the state was 3.2% year over year. So again, very interesting. We're seeing everything kind of slow down now. Into a little more detail with respect to April homes price report. Again, California homes stumble into spring home buying season as median price sets another record. So again, going back down to the whole, despite sales remain stagnant despite low interest rates, declining interest rates. So I keep going back to that. We're looking now, as I said, this is a combination of both. No, I think it's more affordability as I really look into it, and people are just tired of paying this price. So the next couple of months will be interesting because we'll see what May and June brings, but the trending is going down, folks. It's definitely going down. Now, I guess you could say home sales were down 0.1% from March, down 4.8% year over year from April. As I said, the median home price is up 3.2% from the year before. Sales of condominiums and townhomes were down 3.8% from the previous April. And year-to-date overall sales were down 7.3% from April of last year. And I'm talking whether it's just the entire year-to-date sales with respect to what's in and reported on by the California Association of Realtors. There you go. If you want to get into more detail here, sales remain below 400,000 units level for the 9th consecutive month and have fallen on a year-over-year basis for the full year. So again, the volume is a lot lower for a full year now with what's being transacted. Other key points in the housing data for April, sales drop on a non-seasonally adjusted basis for all major regions, with the Central Valley region experiencing the smallest decline in sales at 0.4%, and the Inland Empire recording the largest decrease of 7%. And you could say that San Francisco Bay Area were down 1% from April 2018. Alameda, Marin, San Francisco, and San Mateo counties posted annual sales increases, while Contra Costa, Santa Clara, Solano, and Sonoma saw declines. Sales in Napa County were flat from the year before, so it looks like we're seeing a little bit of balancing out in that market. Los Angeles metro region posted adjusted year-over-year sales drop of 2%, with home sales declining in Los Angeles, Riverside, and San Bernardino counties. Sales improved from a year ago in Orange and Ventura counties. Again, the median home price increased from a year ago in all regions of the San Francisco Bay Area. Except of the 9-county region, only Napa posted an increase in April of 3.3%, while San Mateo, Santa Clara, Sonoma recorded the largest price declines of 9.5%, 7.7%, and 5.8% respectively. All right. Conversely, home prices rose year-over-year basis across Southern California and up 2.3%. So there you go. So again, when we look at this, the number of homes available for sale increased by only 10.8% from last April, but still enough to give us the much-needed volume that people need to buy out there. It's not huge, but it's getting there. Unsold inventory increased, as said, from 3.4 months from 3.2 months the year before. And the average per square foot sales price had a moderate increase from $281 a square foot in April last year to $290 a square foot. So again, if the state's up a little bit, you're going to see, again, a slight, it's $9 a square foot. So here we are. It's basically April numbers. So April kind of is the start of the spring selling season, so we'll see what happens in May and June. More people are probably looking at, okay, we see some decrease in numbers here, and interest rates, whatever. We might go to the table. If there's more sales available, there's more choice. Maybe there's some more negotiation room available for us as buyers, etc. But again, we see a record price, all-time sales price at $602 and change thousand. So it's kind of weird. So we, on one hand, we have decreases in sales, decreases in volume, decreases in prices, yet now we're seeing that now, yet we're still seeing some of the transactions, I guess you could say, dragged along and having a little bit of a sales price increase. Now, sales that would happen in April are most likely things that were put under contract January, February, and March. So realize that, those sales reflect previous contracted dates and pricing points. So I know that the more inventory comes on now, people are putting lower sales prices as listed properties, and they're declining their prices more aggressively. So we will see the effect of that in the upcoming months. So please understand, just keep that in mind. So that's because it is confusing. When I look at this, I go, if you say more inventory, decreased sales, yet we're seeing higher prices, how is this possible? Well, again, everything is relative to when, action takes place. Physical closings, that took place in April that are sort of, I guess you could say, input to the MLS as sold units and categorized and captured as data are from our pending sales, which could have gone pending March, February, April. So that's the reason. So you're seeing those prices get locked in, and then as time goes on, there's still price erosion. So we're going to see that as time moves on. So that's a scoop for now. Not that exciting. As I said, it's things are still moving kind of slow. We now live in a world where expectations are for quicker information and data is more available. So therefore, we're looking to see things happen faster. It's happening faster, to be honest with you. It just doesn't feel that way because we're so in tune with the data. But the trending is there. It's trending downwards from Case-Shiller, trending downward from the State Association of Realtors, trending downward from National Association of Realtors. It's trending downward from other third-party, real estate sites and providers, iBuyers like Redfin, etc. So, that's what's happening right now. We've mentioned before, we're not going to talk about today, but we see more distress happening. We see a lot more foreclosure filings. So there's a lot of things that are sort of in flux right now that are churning through the market that will take us farther and farther down a path of reduced prices. As again, things bubble up and bubble has to burst, has to release. It's happening before our eyes. It's just different speed and different pace in different parts of the country. So again, think about that. I'll post the links to these things in the information section. So that's it for today, everybody. So again, thank you once again for the views. Thank you for the likes and comments on the videos. If you would like more information, you can certainly email me directly and I'll be sure to get back to you. I know that's picking up. So I know, as I always say every video, I do owe people more comments and contacts. I'm working through it right now. It was a long weekend, took a bit of time off. Now I'm back in the fold and we'll be working harder this week. So once again, thank you for your views and patronage, and we'll be looking forward to speaking to you before the week's end. Thank you.